My name is Jane Hronsky and I'm a lecturer in Auditing and Assurance Services. In parts 1 and 2 of our audit completion procedures, we covered firstly the auditor's review for contingent liabilities and commitments, and in part 2 we covered the auditor's review for subsequent events. In this module, part 3, we will cover the final accumulation and evaluation of audit evidence. In addition to the search for contingent liabilities and review for subsequent events, the auditor has several final evidence accumulation responsibilities that apply to all cycles. These are, first, to perform the final analytical procedures. Second, to evaluate the continued appropriateness of the going concern assumption underlying the valuation of assets and liabilities. Third, to obtain a written representation letter from management. And fourth, to read the other information accompanying the audited financial report. That is, everything in the annual report outside of the general purpose financial report, which is the audited financial statements and notes. The application of analytical procedures is mandatory at the beginning or planning stage of an audit and also at the final review stage of the audit. Analytics provide a useful overall view of the financial statements based on an in-depth knowledge of the business obtained over the course of the audit. Anything unexpected will require further audit work and evidence to resolve. The application of analytics at the end of the audit is normally performed by the partner as the person who is responsible for the opinion for the whole financial statements and is knowledgeable about the business as a whole. The auditor is required by the standards to re-evaluate the continued appropriateness of the going concern assumption at the end of the audit. Again, this is based on the in-depth knowledge obtained over the course of the audit and normally done by the engagement partner. Of course, the analytical procedures referred to in the preceding slide will feed into making this judgment, but the overall judgment about going concern is broader and more subjective than simply being based on analytics on the financial statement balances. If the auditor believes that there is material uncertainty about going concern, they need to discuss this with management, find out management's plans to deal with the situation, and ensure that there is adequate disclosure of the material uncertainty made in the financial statements. To the extent possible, external or corroborating evidence should be obtained to verify management's plans. The auditor is required by the standards to obtain a management representation letter. The purpose of this letter is to confirm any oral representations given to the auditor, to document the continued appropriateness of representations, for example around the validity of going concern, to reduce the possibility of misunderstandings, and to get management to acknowledge in writing that they are the ones who have primary responsibility for the financial statements. As the letter is coming from management, who are not an independent source, it is a very weak form of evidence and should never be relied upon as primary evidence. Lastly, in the final accumulation of audit evidence, the auditor should read the other information contained in the annual report outside of the GPFR to ensure that it is consistent with the audited information contained within the GPFR. After the final evidence accumulation, the auditor now has to integrate the results into one overall conclusion. They now have to evaluate the findings of the audit in order to ensure compliance with the accounting standards and the auditing standards, and to determine the appropriate audit opinion. As an aid in drawing final conclusions about the adequacy of audit evidence, auditors typically use a completing the engagement checklist to ensure that all problem areas have been addressed and that sufficient appropriate evidence has been obtained. That evidence is the support behind the auditor's opinion, so the auditor has to make a final assessment of materiality and audit risk after the entity has processed and corrected the misstatements that have been detected by the auditor. The auditor needs to be comfortable with the acceptable level of audit risk, that is, the remaining undetected material misstatements. Then, a technical review of the client's draft financial statements is undertaken. This is to ensure that they comply with all applicable regulations, the AASB accounting standards and other regulations, the corporations law and the ASX listing rules. This technical review by the engagement partner is then reviewed by a second independent partner as part of the quality control process for the audit. The engagement partner and second partner then also review the audit working papers for the engagement. These papers are the record of the audit evidence supporting the audit opinion and evidence that the auditor has taken due care, fully complied with the auditing standards, and that all audit issues have been resolved. After the review is completed, the appropriate audit opinion is formulated and the audit report is drafted. After the audit is completed, the auditor must communicate with the audit committee and management. They are required to communicate any irregularities discovered in the course of the audit, so that is fraud, in other words, reportable internal control structure conditions, so control weaknesses or deficiencies, and they also need to communicate that they are independent and in compliance with the independence requirements of the Corporations Act. The auditor will also provide the client, via the audit committee, with a management letter. This contains their recommendations for improving aspects of the business. This is part of the value-added aspect of the audit, above and beyond the compliance function. All important audit matters and issues need to be discussed and communicated with the audit committee. The committee fulfills an essential role in protecting the independence of the auditor from being pressured by management, and therefore the quality of the financial reports of the entity. This concludes the third of our 3 parts dealing with audit completion. In summary, the process of completing the audit, evaluating the findings, and communicating with the entity is crucial for ensuring a quality audit.